Well, let's look at Boeing. Well, this is one of the companies in the world that is almost dominating the airways. And I mean, in South Africa, we've got a situation where we've only got a few carriers left, and that's why prices are just rocketing. But for Boeing, I mean, the share price was in March 2019, it was around 437. It's now at 173. And this chart is telling me an interesting story. If I look at this resistance line, it tells me that the momentum is still to the downside, but we start sort of seeing a tiny little double bottom here. And for me, first of all, if it breaks above that line of 180.81, it can easily trigger us a beautiful relief rally, or it can actually tell us that there is a trend change in the making. Well, look at this channel. If you look at that, there you are. Beautiful falling channel. Breaks above that, it can really take the share all the way. Let's see where it can take it to. For me, if I look at Boeing, and we're still in that debate of is economies on the turn, if Boeing can break above this resistance line, my target is 251. That will tell me that the world is slowly but surely to travel again in huge volumes, and then you will see a company like Boeing picking up. That maybe tells me that maybe share prices can maybe go higher. So I'm using this chart to just give me an illustration of what the world is telling me on traveling. And for me, the big thing is that resistance line there. I think if you want to buy it, use the stop loss of 142.71, and if we're lucky, we can go to 251. Of course, it can turn around there, and it can easily go back to 107, 106 in time to come. But this is a classic double bottom. If that double bottom tells us that we're on the lows, we can maybe be surprised and see some higher prices in time to come. As always, stick to your stop loss to play safe. Let us look at Hyatt hotels. Now, first of all, we looked at Boeing, and that tells us about the traveling, but Hyatt Hotels is a company that actually attract people to stay there. Now, on the other hand, Boeing is right at the bottom, okay? And remember, the oil prices can keep their price under pressure. But look at Hyatt. It's close to the top. And while we're looking at it, what do we see? We see a proper inverse head and shoulder here. There's a left shoulder, there's a head, and we're working on the right shoulder. And what do we say? If it breaks above that neckline, and we're almost above that to test it, it's 91.50, it can take Hyatt Hotels 110.60. Now, if you look at the show, and you think about this, you will see mixed messages from shares all around. That tells you that the market is actually confused and in two camps. One say shares must come down, and the other say shares can go up and the economy is on the improve. And if you've got some mixed signals coming out, what is the best to do to play safe? Is to trade small or buy small, do your planning. And I personally believe that the world is flooded with a lot of free cash around the world, and I don't know if the Fed is going to start to pull that in with interest rates over time. I think that we're heading into a period where some of the big Federal Reserves would like to take some of this cash back, get it out of the system. So we will see higher interest rates for longer and maybe put some companies under pressure. But on the other hand, we'll see a market that gives you many trading opportunities. We'll see. I mean, our market is close to an all-time high. Some of the other markets not, but we'll see. I think we're in for a period where the markets can consolidate around certain levels for quite a period of time and give you opportunity to trade in and out there, or make a few rand by buying and selling, and maybe pick a few nice long-term shares and then hold on to them if they really rock bottom. Let us look at Kumba. I had a phone call the other day, and some guy said to me, listen, Frans, Kumba paid out a beautiful dividend, and since then it just dropped. Well, Kumba is one of those companies. They tend to pay out some nice dividends, and then suddenly it comes under pressure and it remains under pressure. But if I look at Kumba here, it looks like we've seen a beautiful falling wedge that has broken to the top. Look at that. But unfortunately, it played out to the T. I mean, it broke up and it went from 382 to 469 in a matter of a week. There's a lot of people that say that iron ore and all the other major commodities will be under pressure because of supply constraints. And if I look at this chart, it's still telling me it's early days. This is a weekly chart. If you missed out the boat, because sometimes we tend to feel bad if we miss that first move. Wait for it to pull back a little bit, find a consolidation, and then go higher and then buy it from there. So for me, it's quite simple. Kumba had a beautiful rally. Let's see if it can come back to test this support. There's the support. And remember, this is a weekly chart, of course. This is the support sitting at 411.73. By the way, the commodity shares had beautiful rallies. And let's see what Kumba can do, if it really can come and test. If it bounces off here, you've got a good positive technical kiss, and that will be positive for me. Anglo American, one of the giants. Well, the share price had one phenomenal week last week. I mean, it went up from 555 to 672 in a matter of 3 trading days. And I mean, that really assisted also the index, with Richmond really helped the index to go higher. But if I look at this chart, and I mean, this is a wonderful company, no problems with the company, solid company, sits on loads of cash. They also do some copper, and there's a shortage in copper around the world. Maybe people will say, yes, Anglo is one of the shares for the future. Maybe China comes back, and they big in commodities usually, and that can assist the company. But if I look at this, what worries me is there is a left shoulder. Here you are. Remember, this is a weekly chart. There is the head, and we may be working on the right shoulder. I mean, last week, that little tiny right shoulder that we had was wiped off the table when it broke above 600 Rand and 70 cents. It shot through the roof. I think we all need to start to focus on this line. I mean, it's quite away from here. It's 500 Rand. I mean, it's 170 Rand from here. It almost sounds unrealistic that it can break to the downside. But for me, we must hold those levels on Anglo American. We can go higher, then it will wipe off that left shoulder's high, because look where the left shoulder's high is. I just want to draw it in for you. There you are. You can see there's the high of the left shoulder. If it starts to break above 694, we can really say that this head and shoulder formation can maybe disappear, and then the share can go higher and maybe reach for that all-time high of around 800 Rand. I mean, if you look at this chart now, we must think about it and say, can it really give us a head and shoulder formation? Early days, we don't know. I mean, last week had a solid, beautiful rally, and let's hope that we, of course, completely wrong again. There's the top of the head, projecting it to the neckline, and if you project it to the downside, look where it can take it to. Can you believe it, that the share can maybe go to 265.74? Of course, it's only if that 500 Rand level turn into a weekly resistance and the share remains below that for a period of time. Let's look at Sun International. I mean, we're on the economy. South Africa's economy is in the doldrums. In actual fact, I don't think there's a lot of an economy left. It's all the commodity and the farming communities that making some money. But I mean, if I look at this chart, there's nothing wrong with this chart. That tells you, I mean, can you believe it, in May 2020, this company was sitting at 7 Rand. I mean, that was on the height of COVID and everything went wrong. But since then, it moved up nicely and it's now sitting at 35 Rand. Look at that. Look at that beautiful trend line. Nice move, not steep enough to make you worry, and it just ticks higher. And on the other hand, if you look at this, it had some resistance there. It was a beautiful, what we will call a ascending triangle. What happened? It purely broke above that line, above 32.51, and it went to 35. This chart looks fantastic. For me, I will only get worried when this support line that's been building all the way from 2020 turns into a resistance. While it is above that, that tells us that there is still a lot of money in this economy left so that the company can have a share price like this. That tells me that maybe our economy is not that bad. It's only me that think the economy is bad. But if I look at it, while this support line, and that sits at 28 Rand 80 cents, is a support, the share price still looks solid to me. And by the way, if you want to add to them, if it comes back to this line of 32 Rand 12 cents and it bounces off there, then you will have the confirmation. And where can the share price then go to? And then, can you believe it? It can then maybe surprise you even more and go to, there you are. It can go to, there you are, 40 Rand 18 cents. What is the message of this talking technical? That the share prices sends out mixed signals. They had beautiful rallies in the last 3-4 weeks. And I mean, we're in the end of the year, we're in the season that it will probably be a little bit better. But I'm just a little bit nervous. I get mixed signals on many shares, and that makes me a little bit nervous. Remember, the Rand also strengthened some beautifully, and that tells you that there was a lot of money flowing into our index. And maybe some people say that our index is offering value, and only time will tell. But at the moment, mixed bag. So I'm a little bit nervous, but maybe we are heading world and we'll tell the world, listen, we lead you into a new bull market. Well, let's see. Well, thank you for watching the show. Visit our website www.fransklerk.com for more info, and we'll chat again.